Joining us now with more is Greg King. He's the founder and CEO of asset manager Osprey Funds. So, Greg, Osprey has the OBTC, the Osprey Bitcoin Trust. It's a publicly traded Bitcoin-focused investment product. Maybe can you confirm you're seeing significant outflows?
Yeah, so we're not, but I suppose that that's really a function of the market here in the U.S. I noticed that a lot of those flows are actually offshore. In the U.S., as most of your listeners will know, a spot Bitcoin ETF sadly has not yet been approved by the powers that be. And so what you have are trust products that are effectively closed-ended, such as our OBTC fund. And so in those products, there actually are not withdrawals. They trade like a closed-ended fund. You know, I just saw the data that you put up on the screen, and not familiar with exactly which fund caused that sort of downdraft. But my sense would kind of be the opposite. I mean, I feel like Bitcoin was acting as a safe haven during this last crisis. And even though, there may be outflows in certain funds, I think that the thesis for Bitcoin is kind of getting proven in, when banks are rattled, people are moving into Bitcoin. You saw the price go up significantly over the weekend and into Monday, Tuesday. So we're not seeing the same thing here in the U.S.
Okay, so, and does this have to do with the, USDC stablecoin market also being on shaky ground? Are people looking to BTC as a safe haven?
Yeah, I think that's part of it as well. I mean, what a crazy weekend we had, right? The impact from Silicon Valley Bank, and then, the Fed's kind of moving in over the weekend, the issues with the stable coins. And, to us at a high level, it's just been really interesting to watch as Bitcoin, because there's always a lot of criticism around Bitcoin and not being, keeping pace with inflation and all the things that people have been saying. Yet, when kind of hit the fan a little bit for a few days, Bitcoin spiked, and to me that says a lot. We were thinking about those kinds of moves on a personal basis around the office as well. And I think a lot of people in the space are starting to realize how much control is out of their hands with respect to their fiat currency.
Yeah, it's interesting because your view is entirely opposite to ByteTree. They're saying institutions aren't buying the narrative that BTC is serious and here to stay. But what are you seeing in terms of liquidity and volumes out there? There are a lot of concerns around that.
Yeah, I mean, so, whether you ask the previous guest about choke point 2.0, I'll sort of plead the fifth on what I really think. But, he was right. There's an effect of that, even if it wasn't by design. And so you're going through a period here. I think to take a step back, obviously things with the FTX debacle impacted a lot of people in political positions, right? I don't think they're looking very good. I don't think they're feeling very good. I think they're needing to react in some way. And this might be an overcorrection. In fact, I certainly think it is. You put up the letter from Representative Tom Emmer. He seems to think it is. There's very much a division of views here. But whether this persists in terms of a persistent effort to choke off access, it is a problem in the short term, but we think that the fundamental case is so compelling for Bitcoin and distributed ledger technology that can be a place to store value on a global basis, that it's kind of inevitable that this too shall pass.
If crypto firms are being debanked, as it were, where will they go? And are you facing similar problems?
I mean, yeah, so our bank that we still use is Signature. Today, obviously, you've seen the prerequisite apparently that the feds are asking for, that any purchasers, don't service crypto clients. I mean, if it's legal activities, I don't know how you could credibly require that. It seems like a bias. It seems like a prejudice. But it is what it is right now, right? And so we have to work through that. But I think the demand is there, and they've successfully debanked a couple of on-ramps. But there are other banks that are springing up to take that position. They might need to be a little more careful in how they manage their own balance sheets, how they relate to their regulators, et cetera. But Because we believe in the fundamental case for crypto so strongly, and we're not alone. Supply meets up with demand. So there is clearly a demand here, and all of a sudden it needs to go somewhere, and someone will meet that with some supply of banking services.
Do you think you will be able to find something in the United States to service that, or is there pressure now to go offshore?
Well, there is pressure to go offshore, but I think we would be able to find something in the United States. I mean, we're already discussing with a number of other banking service providers. It's not like there's nobody else out there. There are. It's just that those banks were the largest and the most well-established in terms of servicing crypto companies.
Yeah, a big part of Signature Bank was Signet, which allowed an easy backend for crypto companies to transfer money. I mean, is that still up and running? What happens when that goes offline? What are the options then?
Yeah, so we actually, for our business, did not use Signet, but I understand what it is. And those types of delivery versus payment systems within, sort of intrabank will obviously be more scrutinized going forward, and those types of services might be a little more difficult to put out there to clients. But just generic sort of banking services where you're holding cash in an account and you occasionally need to use it to buy crypto from a reputable counterparty. I don't see how those types of services won't be offered again very soon.
Yeah, we're hearing reports that Fidelity is already looking into offering some crypto services out there. But Greg, thank you so much for joining us. That was Osprey Funds CEO Greg King.